What is up, everybody? Logan coming at you guys with a new video today. It's a short week this week, right? We have Easter, Good Friday's closed, so uh, Holy Week this week, right? Just in general, got the Jesus chain on. Appreciate all the love and support as always, even though I've been away for a month. Nothing in particular. I've just been striking a big brand deal with one of the big trading platforms, so I've been a little apprehensive about moving forward and like promoting other platforms and stuff on here. And everything's been going well. I've also been managing multi-million dollar portfolio. I think we made like 120 grand this month with it. You know, with my management over there as well, my time just hasn't been dedicated to YouTube as much, but I want to get back into it. Like you guys already know, I love making these videos. I've just been working, traveling a little bit too. I know we talked about that in the last one, but let's hop into this one. We're going to talk about how, you can make 500 bucks a day. Something I've been doing, and I still do it with some of the smaller portfolios quite a bit. And a lot of the trades that I share with Amplified, but I'm actually shifting the Amplified strategy. If you guys are new, Amplified Investing is a Discord group that I run. That's a very passive form. And I also have a very active trading group as well, where we actually set closer strikes and position ourselves a little bit different. Where we shoot for like 2 grand a week over there. Amplified's very passive. It's more of like a set strategy you do every day. But one thing we've been doing, right? We've been listening to our expected move. That's one thing that we do quite a bit over there. This was for yesterday. I know today's the 26th. I'm going to add a trade on for today, but I spend a lot of time utilizing the expected move high and low because we spend so much time in between these levels. So I'm always setting up strikes. Like if I can get 1.5 times outside the expected move, you can find a really nice trade. And I would say about 70% of the trades that I do, I make sure I set up around that 1.5 times spot at the moment. But I've been being actually a little bit more specific about price action, what I'm looking for, and how I'm shifting the strategy a little bit. We added this iron condor last week, and I could even use this as an example. But, for one side of the trade giving out $1 and then getting 60 cents on the other side and then closing it for $2 or 20 cents. And I even actually averaged up to about $1.15 on this call credit spread from last week. The link to join Amplified is down below in the description as well if you guys would ever be curious about a very passive way to trade options on the S&P. So I closed the CCS for 5 cents. I got the PCS for 15. And then, I want to do one trade this week, which I'm actually eyeing up this afternoon. I think there's one really good setup to take into Thursday. But it's a holiday week. Most people don't even trade at all, right? It's a very laid back week. But looking at these trades now, something I've been doing quite a bit is I've actually been taking my foot off the throttle, where with Amplified, I was like trading every single day and doing like, hey, the same 2x the expected move, but sometimes you still get ran over. But ever since I shifted the strategy, we're actually getting more credit every week. I think in total per contract, it's close to like $250 to $300 a week, which is nice. And that's before the management. Like, of course, if we have to close things out and pay a 20-cent debit, or if we do close a trade out early, it's going to skew that a bit. But last year we had about 7 grand per 2 contracts that we made, and this is actually outperforming it just slightly. So I've been just being a little bit more conservative and like picky about where I'm placing my strikes. In general, where I'm getting better credit, but very, very conservative about when I'm entering a trade. Similar to last year, right? We had this as our performance throughout the year. And this year, we've started off kind of looking like this area all over again. So I expect shortly to start to see all of our gains continue to come through with the little shift I've done in the strategy. But this is where we were for 2 contracts after last year, just shy of 7,500 bucks with the amplified trade. So we're currently working on a table to add for this year's trades. I just always wait till the end of the first quarter to get that done, and we're right around here right now. So, and then we start that and can continue to track it throughout the year, because I'm very apprehensive on like tracking trading results like in a short term, just because it's, you're either you have an option of like having a rough time like this and giving up on a strategy, or getting too involved when you have a really good quarter like I had in the middle of the summer, right? And then shifted down again and then ended the year really strong. So you can like zoom in really hard to this or zoom in really hard to this and get a different idea than what the whole picture is in general. Let's hop over to TOS and we'll take a look at a couple ideas and what actually inspired me to take these two trades in general with the 90-point wide iron condor that we placed and got a $1.60 in credit on. So we're actually going to take a look at a couple charts today. And the first one we're going to take a look at is this 20-day, 30-minute chart. I've been utilizing the squeeze a little bit more because that's been predicting some of these moves pretty aggressively. We didn't have a squeeze, but this was FOMC, but we put that trade on right when we gapped up to this yellow line. I've been using the standard deviated charts, and every time we've gotten up to this yellow line, even though we're in a bull trend, this seems to predict pretty well when the pull down is going to start. So I start to sell premium up here. So last week we grabbed $1 on the 5290, 5300 CCS. And then as the market trickled back down on Friday, right, we scooped that 60 cents out of the put spread for expiring that day that we wouldn't go below 5200. And that was all the way down here below the mean. So knowing we had these moving averages and this time frame to help us out, you know, and we're in a bull trend, so we should expect the trend to be upward projecting right at the moment. Now we are building up a squeeze right now. Last time we built up a really long squeeze, we actually went really long from 5,080 all the way to 5,140. So I think there's a shot that this could break up or down, right? I really think, and it might not happen today. I mean, today's Tuesday. We have like 2 hours left of the trading day. I doubt it moves today. Probably not tomorrow, but I could see like into Thursday or into next week, price moving, you know, a big 30 to 40 point chunk. Most likely overnight, because that has been most of the setups we've seen lately have been the overnight moves. If you guys have been paying attention, and I've even drawn a couple like open gaps that are below still as well, even though we are still in this like pretty aggressive uptrend that we've been in for a while, right? And we've been talking about that quite a bit overall, you know, this like unrelenting bullish price action that we've seen. So overall, the trend stayed pretty steady, which makes our entries even easier on these trades because as we come back down to the 10-day, right, you can just grab some PCS plays. When we get too far extended, we grab some CCS, and that's what we did last week. We traded a 0DTE put credit spread on this day. We sat out FOMC as we always do. Then we started selling call spreads. And as we came closer to the this line here, we started scooping put credit spreads again. So you also have to remember, right, from a psychological perspective, that the market is not like, I see a lot of people complaining about it, which is fine. Like, it's hard. They're like, oh, it takes no skill to do this. The market only goes up. And it's like, well, fortunes are literally made in a trend, right? Like, I have loved this market regardless of however the performance has been for anybody specifically. But from a perspective of like, you can just go long down on the moving averages and you can short at the top. But most people are trying to short after it's been red for a while and they're going long after 2 big green days. Of course, you're going to get stomped, right? Like psychologically, if you want to catch a move, you have to go long after it's been dropping for a while, right? At support. But psychologically, people can't handle that. They're so used to like, I want to see my profit now, or seeing a big red day just take all of their green days away from them. So, and that's what I love about the markets more than anything. And what keeps me so interested is not even the money part, even though we do well. It's just the psychological aspect of like how people get stomped and how they get like suffocated by the market because it's really interesting, right? Like it's a game and it's a fun game to play. But so we've been utilizing this and kind of understanding that trend a little bit more and focusing on utilizing that in our favor for the trades because there are a lot of things to learn from a trend, right? I mean, this is very strong and has been since November. There's really no reason for it to turn around. And I would only assume that's going to happen if we start to lose the 10 and 21 day. So we have until about 5150 of pulling down until I would be shocked if it continued to move further down, you know, and wasn't a trap like it would have been here, 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 you know, and I sound like a broken record picking out every single point on where, hey, this would have been a trap. So you got to be careful on what you're doing, right? But overall, I've been doing pretty well. I hope you guys have been doing well as well. Just trading a lot of short-term options, but a lot of 0 and 1 DTEs. It's a lot easier to trade 0 DTEs when the VIX is higher because you can just get such better premium. And then when the price moves in your favor, you can just strip that contract right off. So I do appreciate everybody watching, but I wanted to show you guys that. And if we hop over to my flexible grid, right, the price has pretty much just been staying completely sideways, consolidating, waiting to make a pretty heavy move. And that's what that squeeze was identifying before. So a lot of potential downside. We have already filled this gap from down here. We filled the gap up. There is a new open gap though, right now at 52.17 that we have to watch for. And then we still have this open gap from back here at 51.16 to pay attention to. So complete full technical analysis person here. I don't care what the news says. I don't care what the fundamental analysis of things are in the S&P. I just trade off the technicals and have done pretty well with it. So it's just, I think most people self-sabotage in markets, and it's their own thinking or thoughts, or this is too high, or this is way too cheap. That means this must suck. This stock must be horrible. It's like, well, I don't really think so. I think it's everything's price, right? Like that's the only reason you could ever get me to trade anything is price. Like I'm a price action trader with a technical analysis background. I don't really care about the things that everybody else seems to care about in the market. It's like, what if the economy crashed, or isn't the housing market too inflated? And it's just like, yeah, but price doesn't care, right? Like it does not care about that stuff. Listen to the technicals, follow your averages and when to get in, wait for the top, wait for the mean reversion. Like I have two setups. I make 6 figures a year trading off two setups. Like it's not too terribly difficult. It's just you got to make sure you don't self-sabotage, because self-sabotage is going to crush you in the long run, right? Just thinking something's going to happen, or this has to pull back, or this has to do this, is when I see most people tuck their tail between their legs and say, I'm not trading anymore. And it's like, there's nothing I can imagine doing better in my life. Granted, like, I don't know, I love trading and I feel like I'm really good at it. But also, I set my ego to the side when I need to. But there's like nothing else I would rather do than trade because it just makes a lot of sense to me. But I really appreciate you guys taking the time to learn, and having a chat here is great, catching up with everybody. And if you haven't left a like or a comment below yet, I'd appreciate that. And yeah, I'm super pumped and really appreciate all the time you guys have spent watching this one.